Hey guys, welcome to the channel. This is going to be a series of videos in which I hope you and I will learn about investing from a common sense, common person point of view. I'm not an expert, so I'm going to put that out there right up front. You'll probably see me make mistakes. I'm going to have to be man enough to own them in front of potentially thousands and hundreds of thousands of people if these get views, but that is something that I am willing to do and ready to do. I think it's important that we have a voice to approach investing from a common sense, ordinary standpoint and perspective. I think there's too much information out there that is speculative, that is hyped. I think there's too many people making videos on Robinhood and showing you the hundreds of stocks they own, and that's fine. If that's the kind of investing that you want to practice, you're going to want to go follow those channels. But what we're going to do here is value investing. That is a style of investing that would seek to determine what a business is actually worth based on historical data and the future outlook, and then try to get that business for a very, very discounted price in times where fear in the whole market and the herd mentality has driven that price down, because driving that price down doesn't change the intrinsic value of the business. So you will probably hear me mention people like Phil Town, Warren Buffett, Charlie Munger, Ben Graham. They're not my buddies, obviously. I don't hang out with them, but I can learn from them. I'm not going to show anything proprietary to Phil Town's systems or website or anything, but I will mention him as a resource because he puts a lot of information out on his YouTube channel, and I would encourage you to go watch that. Go watch any of the lectures you can find by Warren Buffett and Charlie Munger. You can read books by Ben Graham. He has one, at least, that I know of, The Intelligent Investor, and while it's what some would call outdated, the fundamentals of kind of what he's talking about are where I want my mind to be. So the theme of this first video I want to be, are you a good capital allocator? Going back to mentioning Phil Town, one of the things he says that we want the leader of a company, the CEO, to be is a good capital allocator, meaning he knows how to put the money in the right places to make it get the best return. That's what we want. So we are all the CEOs, you know, whether you're man, woman, husband, wife, partner, whatever kind of situation you got going on. You know, you're the CEO, and maybe you have a co-CEO, you and your partner, your spouse, of your own company, of your household, of your family, and you want to take the money that's coming in and you want to put it in the best places, and that's what we all want. And it's sometimes tricky to find a balance between saving enough, investing enough, and actually all the expenses that it takes to live, and then some recreation. You know, in the time we're at right now, this being March of 2020, is a very, very tumultuous time for the nation. Some people are going to lose their jobs, unfortunately. Some people are going to have financial hardships that they have to work through. But it's important in these times, no matter what side of that you're on, whether you're trying to just get by or whether you find yourself with a little bit of extra money to invest and put in the market while everything is on sale, you're going to want to be smart about where you put that. And the best thing I can tell you is you need to know what it is you're buying. You need to know the value of what it is you're buying. Just because prices are down doesn't mean everything is a good buy. You want to allocate that capital the smartest and the most advantageous way that it's possible to do. So I would seek to find companies that have been overpriced up until now for the last couple of years, because this market's been on a big bull run since '09, really, when it rebounded after the '08 crash. You know, so we've had a 11 or 12 year kind of a bull market, really, in most sectors, with some dips here and there. And there's been companies that I've wanted to purchase, that I've had on my watch list, that have just haven't been a good buy. You know, they have been way out of reach, because if you pay more than something is worth, the likelihood of it being able to go down and how quickly it can go down is a place that I don't want to be. I want to be on the side that I do all my research and I use these calculations to evaluate the company and place a future value on it, you know, so I know what kind of value I'm working with as a value investor. But I can be wrong, and I will be wrong. But if I buy it at good enough of a discount, and you get a company that doesn't have a lot of debt, you're going to, most times you're going to be okay. You don't have to get it right 100 out of 100 times. You're only going to get it right a handful of times in your life to make this happen. To think that you're going to go knock it out of the park every couple months and you're going to find this company that no one else has seen and that no one else recognizes, and or you're going to do the opposite. You're going to buy what everybody else is buying just because everybody's buying Tesla because they're cool, and you don't know what they're worth. You don't know how much debt they have. You don't know what kind of earnings per share that they've seen or what kind of growth rate they've seen. You have no idea. And I'd be in the same boat too, but I learned how to evaluate these companies and kind of see what they're worth. Some of it is subjective, but most of it's not really. You can really see what a company has the potential to do in the future by what they've done in the past. You know, I like companies that have been around a long time. Several of the companies that I've invested in, past and currently, been around for 150 years, you know, since the late 1800s, 1870s, 100 plus years. That's a long time. So have they been perfect and have they been wonderful companies to own that whole time? Probably not, but they have endured, and there's a reason they have endured. And right now I can look at them for the last 10 years and I can say, what has this business been capable of doing? What has this business been capable of doing in terms of allocating the capital that comes into them through me buying shares and you buying shares and everybody funneling money towards them? And if they use debt, they use a little bit and they use it very wisely and they could pay it off very quickly. I can feel comfortable investing in something like that. So I want to encourage you as you go and you look for opportunities in the market right now, that you approach it with the understanding that not everything is a good deal. Just because the prices went down doesn't mean everything is a good deal. If it's not a good company, it's not a good deal. And you need to remember that. When you go look at Ford, Ford is in crippling debt. Ford has terrible numbers. They have terrible earnings per share, terrible book value per share. I would never want to own Ford. I like Ford pickups. I like Ford cars. Ford's a good American company, and I hope they improve their financials. I hope they improve the way they're running the company. I hope they get stronger. But just because I like them, I like GM. I'm more of a GM person, but I would never buy GM, at least not right now, not until they change radically. Because just because I like it doesn't mean I have to own it. You need to understand what you're investing in. You need to be passionate about it, but you got to turn the emotion off and you got to objectively evaluate whether this is something that you really, really want to own. And Warren Buffett says you shouldn't own a company for 10 minutes unless you own it for 10 years. You shouldn't put money in that company unless you would trust them to put food on your family's table. That's the kind of investing I'm talking about. Now, can you get great returns doing that? Of course you can. There's a lot of options and a lot of opportunities in value investing to go out there and get an amazing rate of return. You don't have to feel like you're missing out on all these great gains and these risky and these new companies and these tech companies that are difficult and complicated like Tesla. He's all over the place. They're a great company. I think he's doing great things. It just doesn't mean it's the right time right now for me to put my money in that, because that is a speculative endeavor that they're going to get better. Tesla in particular, go look at how much debt they have. Look at how much cash they have on hand relative to their debt. Look at their earnings per share. You know, you got to, if you're going to be a value investor, you got to start thinking about these things. Now, if you're going to be a speculator, you're going to be a gambler, then you go buy Tesla because they're really cool and because Elon Musk smokes weed and carries around a torch and, you know, blows things up. That's awesome. But that doesn't mean that's where I need to put my money. So I hope that you'll find this channel as a good source of information to get you thinking about what something is worth, and then how do you buy that for a discount? We want to go buy $100 bills for 50 bucks, and you can do it in the market because fear drives the market down, greed drives the market up. The market is emotional, it is not rational. And if you're patient and you're willing to sit in cash until an opportunity comes along, and then you're willing to go in when everybody else is fearful because you have researched the company, you research the leaders of the company, you research their history, you research the story around the company and what makes them great and what is their competitive advantage, what separates them from everybody else. When you're that confident in a company, you want the price to go down. And if you buy it, let it go down some more and buy some more. Take a slice, take a slice, take a slice, and get into that position for a very favorable average cost on your shares, and then watch it go up. Because when the confidence returns back to the market, when we persevere through the situation we're dealing with right now in the nation, March of 2020, and we're going to, because America will prevail. If you believe in America, then you're going to be able to make good decisions. If you think America's going to fail, you probably don't want to be an investor in the stock market. You probably want to put your money somewhere else and bury your head in the sand and wait for the world to end, but I'm not going to do that. I'm going to put my capital to work, what little bit I have, and we're going to watch it grow together or not grow. You're going to find and learn from my mistakes, learn from my successes, hopefully, and we're gonna do this thing together on this channel. And I think it's important to have this kind of resource. Just a regular Joe. I'm just a guy who likes to invest and to learn more about this thing. I'm not any kind of trained professional. So that's my disclaimer. Anything you see on this channel going forward, whether I buy, I sell, whatever I say, it's just my opinion. It's not financial advice. You should consult a professional if you're not comfortable doing it yourself. But I happen to believe that no one will care about your money as much as you. And no one will do as good a job if you're willing to put a little time in, a little effort to learn how to identify an amazing company and then be patient so you can buy that company at a deal. You're going to do a great job with your money. You're going to beat the market, and you're not going to have the risk of being in something you don't understand and being in something that's overvalued and being in something that has crippling debt, and all of a sudden things go sideways on you and you just lost a bunch of money. You do not want to lose money. You want to approach this not from the mindset of how much can I make, but how much can I protect my capital and not lose it and not go backwards. Short-term losses are part of the market. I'm not talking about that. I'm talking about crippling losses, being on the wrong side of the market. There's all kinds of indicators that told us, even though there's no way to time the market, I don't profess to be able to, and there's no way to know that a pandemic was coming, right? What I can tell you, though, is that the market is overpriced. It has been overpriced for several years, and that's why I was sitting in cash. I went almost 2 years and did not buy a single stock. Although I love investing, I love being active in the market, I refuse to pay the premium double, triple prices for these companies, even though they're great companies. It's only a good company if it's a good deal, and it's only a good deal if it's a good company. I don't know if anybody's said it that way before, but maybe that's my phrase. But it's only a good company if it's a good deal. You got to think about it that way too, because it's only a good company for you. And all that means is you have to be patient. You identify the good company. You say, these guys are the best in the world at what they do. They're world class. I don't want to buy the run-of-the-mill stocks. I want to buy the best in the world because I can. Why would I want to allocate my capital into a mediocre or a poorly performing company in a bunch of crippling debt who can't weather the economic storm? When I could go put my money in companies who are resilient because they're competitive and they're low debt and they know how to grow money. They can grow money in any market with any currency. They can turn a profit. That's the kind of businesses I want to invest in. And I don't need 100. I don't need to live off dividends. I need good companies, and I need to buy them at a good price, and then I need to watch them grow and my capital to grow along with them. And if they become overpriced, I'll sell them. If they go 10-20% above what they are valued at, I'm not gonna sell them outright. I'm going to start selling calls. I'm going to use options to exit a position. That's not the way options are, used primarily. I mean, it's not. There's other people doing it, but most people think about being a buyer of an option to protect a position. Well, I'm going to think about it as a seller. I'm going to sell a call, and if it hits the strike price above where I'm at, I'm happy to sell it anyway because I don't want to own a company that's overvalued. And if it doesn't, I get the income off that option and I keep doing it. So you have an asset when you own a company. You need to think about it like that. It's not just a lottery ticket. It's an actual, you're an owner of a company. You bought a share of that company. You need to understand what they do. You need to understand the industry they're in, or you don't have any business buying them. I'm not going to go buy medical robotic technology laser stocks because I don't understand it. I can understand hunting and fishing. I can understand vehicles. I can understand RVs, side by sides. I can understand auto parts, maybe airlines to some extent, although I wouldn't profess to be an expert in an airline, but those are the kind of things that I'm going to focus on. If you're a medical expert and you're into biotech and that's what you work in or that's what you're passionate about, go buy those stocks because you can understand them way better than me. But for me, there's enough good stocks in the industries that I'm familiar with that I can invest in them. So I'm going to cut this video off. I made this because I've been getting some questions, because people know I invest, about what am I going to buy right now. And I am buying right now. And in the videos to come, I'm going to go into each stock that I bought, why I bought it, and the thought process behind it, how much I paid. I'm going to bear all. And you're going to get to see whether it grows, whether it declines, if I was wrong, if I'm full of crap, I don't know what I'm talking about, whatever. I'm not trying to hit it big. I'm not trying to gamble. I'm not trying to play the lottery. I'm trying to be an owner in really, really good world-class businesses and use this economic turmoil that we're in right now as an opportunity to get into a position for a price that I haven't seen or haven't had the opportunity to in several years. Things haven't been on sale in this bull market for a long time. And right now, some of these companies are absolutely on sale. So I hope you find this interesting and intriguing. Hope you like the channel. Subscribe, give this a thumbs up or a thumbs down. Leave a comment, whatever you think. I want to hear what you think. I want to hear what your style of investing is. And I want to know what your thoughts are on the market that we're in right now. So until next time, we'll catch you later.